So what are some of the key sustainable investment trends to look out for in the coming year?
Sure, so there's a couple. I'll mention three. So first of all, climate change continues to be a very important consideration for sustainable investors. And basically, many asset managers out there have committed to manage their investments in line with net zero. And this same logic of trying to minimize investments risk in response to climate change is also being now applied with the theme of biodiversity loss. So biodiversity loss is about losing species, diversity in the planet. And investors really haven't been thinking about this as an investment risk and opportunity for a while, but it is becoming a really important issue in 2023. The second thing is about increased legislation on sustainability issues. So previously, let's say, most governments around the world had a net zero target or maybe a biodiversity target, but didn't really manifest in the legislation applying to a certain industry that might be polluting. We're seeing a lot more of that. For example, carbon prices becoming higher, which is really creating an extra cost to those polluting companies, or supply chain legislation putting potentially large fines on companies that are not managing modern slavery in their supply chain. So all of these are becoming tangible, and that means for sustainable investors, there's a lot more materialization of things that we were anticipating happening, and we're already well placed to act on, but they're now becoming really material risks, and we're better placed to outperform in that kind of environment. And then the last thing is the cost of living crisis. I mean, lots of us are seeing this happen in our day-to-day lives, and this is actually really affecting people with relatively low-paying jobs or on zero-hour contracts. And investors are starting to think about how they can use their influence in companies that are large employers in order to increase minimum pay in order for them to have a less tough time in these rising cost of living costs.
Really interesting. So going back to a couple of your points, so biodiversity, how do you see biodiversity fitting within your portfolios?
Yeah, that's a good question. So three ways. So the first way is that we can manage the EQ portfolios to avoid the types of companies and industries that are the biggest destructors of biodiversity. So for example, the EQ positive impact portfolios will not invest in animal farming, which is some of the biggest drivers of tropical deforestation, won't invest in extracting oil and gas from natural resources, because again, that destroys local ecosystems. Again, massive driver of deforestation. So you can avoid investing in some of these big drivers. Then the second is you can invest in solutions to biodiversity preservation. So we invest, for example, in sustainable forestry and in our infrastructure fund, or you might invest in a company that is creating kind of a circular economy scheme so that you're not having to extract these natural resources, because you're creating a circular loop that eliminates the primary extraction of, for example, minerals for batteries, first of all. So these two, so avoiding and also investing in solutions. And then the last is through stewardship. So through engagement and through voting, you can really try to change companies' behavior, their disclosure around biodiversity risks, and therefore it allows us to make better decisions and improve every investment's impact on biodiversity over time.
Okay. And then regulation. So we work in a regulated world. It's something that we welcome, certainly from the financial advice point of view. How does that come into your portfolios? How's that change really going to help you?
There's many different ways in which regulation is now affecting us. I mentioned the carbon price earlier, and I mentioned supply chain acts, but let me give you another really concrete example. So in the UK, there's EPC ratings. I think a lot of us know what that is, an energy efficiency rating on a building. And what is being proposed is actually a rise in the minimum level of energy efficiency ratings in buildings that should be rented out. So for you to be able to rent out your building as a landlord, you need to have C at least. At the moment, the average in the UK is D. What does that mean? There needs to be a huge investment in energy efficiency equipment, for example, new boilers, new windows, insulation panels, etc. That comes at a high cost. So that is a massive headwind to some of the real estate investors out there that are holding property that have really low energy efficiency. If you invest in those that are already there, you're doing quite well, right?
Yeah.
So this is one risk that is materializing into the investment world if you're a real estate investor. But again, another thing is if you're investing in the solution providers, let's say the insulation panel providers, the solar rooftop manufacturers, the double glazed windows providers, these types of businesses that are solution providers to climate change, then you are investing in businesses that have growing demands for their products, and obviously that manifests in the investment case. So that's a positive for us. So turning the risks into an opportunity.
Okay, so real opportunities for all those areas then. Okay, great.